currently the portfolio has 18 fantastic, boutique fund managers investing Australian equities, and we've got 21 funds there. So that's a very diversified portfolio. Tell us a little bit about that diversification from an investment committee point of view.
Well, we have guidelines. So we've basically established that we want to protect our investors, particularly the mum and dad investors, from real downturns in markets. So we've got some absolute managers, some market neutral managers, and some long only, real stock pickers. We've got a reasonably heavy weighting into managers that, are real stock pickers, don't care about the index, just want to pick the best stocks. And we have some ballast in there, where we've got some managers who basically aren't looking to shoot the lights out, from month to month, year to year. So I think we've got a really, really good mix of trying to protect for downturns, but also capturing a lot of the upside when it comes.
So we talk about long equities, we talk about market neutral, we talk about absolute bias. Why is it really important to have funds that work to this sort of investment style within our portfolio?
Oh, again, I think you don't want to be caught, and we've seen that just recently in the last market downturn. If we'd followed the trend and just had all growth managers, we would have done quite well in the last 2 years up until probably September last year. But it would have been an horrendous year this year. We'd be down under the market by 10 or so %, right? So because growth has fallen out of favour as interest rates have risen. That's why we have a mix. That's why we try to protect. We know that markets, on average rise, but we also know that they have big drawdowns. And so it's a matter of trying to have that real mix, I think, Caroline.
So, John, let's look at the performance of Future Generation Australia. How do you deal with negative performance?
Yeah, look, the last quarter's been good, but prior to that, we had a tough period because we're overweight small caps, and that sort of impacted the performance as small caps underperformed. But in the last 3 months, that's turned around. So we're pretty comfortable when you look in the longer term numbers. We're well over 3, 5, and since inception. So it's just one of those things, sometimes the markets treat us poorly. We've had other periods like this before where the small caps have underperformed, but they've bounced back, and we rely really on the stock picking ability of the managers.
But that seems to have corrected now in the last 3 months.
Yes, it does look like that, Caroline.
And what do you think is unique about the Future Generation Australia portfolio?
Oh, just the amount of stock-specific risk in the portfolio is very unusual from an institutional point of view. We look at a lot of institutional portfolios. There's nothing quite like our portfolio in terms of the number of stocks, and yet the degree of stock-specific risk or ability to outperform by holding those specific stocks. And it's really unique.
So let's turn now to Future Generation Global.